Good afternoon, traders. This is Michael and Paul coming to you from GammaEdge. We're going to do a overall market review on this Sunday, March 13th. First, we're going to discuss the tick, which should be your leading indicator right now with the overall market conditions in negative gamma. Then we're going to discuss some technical analysis, and then we'll finish off with a look at some charts for some inverse ETFs that you might be able to play this week. Go ahead, Paul, and take it away.
Great, thanks, Mike. Yeah, good afternoon, everyone. So as Mike said, we're going to start with the tick. There's been a lot of questions about the tick. We have 3 tick indicators. We're going to talk about 2 of them here today. The first one is with TradeStation. The next one is with Thinkorswim, TOS. We have these studies or these setups available to you in the Discord. They are free to download, so make sure you've downloaded those tools. If you are a TradeStation user, when you download the ELD in the workspace and install those correctly, you'll end up with something that looks like this. Across the top are 52-week new high, new lows, and basically when you see the red dominating, that is telling you that you're hitting more 52-week new lows and you're hitting new highs on a day-over-day basis. Obviously, not a bullish situation. The next trace down is what we call the filtered cumulative tick. This is basically a strong indicator of large, continuous sweep orders that are presented to the exchanges. We call this the institutional indicator, and you can see that on Friday we had some just, not linear down, but it was downward all day. There were pauses where it's flat, but you can see there were areas where it just kept coming down. Looked like we were going to get a bit of a reversal on Thursday. Wednesday was actually a bit of an up day, back and forth on Tuesday, and Monday of last week, very strong down. Again, net for the week, institutionals are more or less risk off, and of course into Friday is one of the reasons they probably went risk off. The third trace that you see here is the unfiltered version of this, and you can see a linear down here, linear up here, big linear down here. Basically, it's just telling you what the tick indicator is showing in terms of the cumulative tick and what the overall pressure of the market is. The last area here is probably the most important. On this particular one, I superimposed the SPX behavior, but we have these moving averages which historically have told us where we turn. And why that's important for you is that the slope of these moving averages is really, really important. When it's sloped down, we are in a long-term trend downward. You should not be going long for any stretch of the time frame. When you are trying to go long and you're pointed downward, you're going against the current, and you're probably going to get chopped up. Down below this, the white line here, the bright white line, is the instantaneous cumulative tick. This is what's really a gauge of instantaneous market sentiment. And as we said on Friday, what we were looking for was a continuation pattern on Friday. We didn't get it. We actually got pretty much linear down all the way in a very strong sell-off into the close as risk came off into the end of the day. If you were trying to go long at any point on on Friday, you most likely got stopped out. And one of the things that could have prevented that is just looking at the overall trend according to the instantaneous cumulative tick. There's another indicator that we use, which is a different form of the exchanges, but it's the same type of concepts. So basically, this is the ARCX, which is the NYSE, the NASDAQ, and the AMEX exchanges. And you can see this is a very clean, very clear picture. You are in a long-term downtrend. We are unable to rally out of that. We keep making a high and then lower high and now lower lows. You should be thinking about the downside and shorting the bounces, not trying to go long for any duration of time. So with that, I will pass it back to Michael, and we can take a look at the Thinkorswim. Michael?
Thanks, Paul. Yeah, we're going to go ahead and take a look at the Thinkorswim tick indicator. It is limited by 30 days compared to TradeStation, which you can pull 3 years of data. But I think what is important here is we still get the same overall concept and view, new highs versus new lows in this top. tick USC here, so it's all USA composite tick. And then down here we have the all USA composite tick with the ribbons also, just like the TradeStation. So again, if you go back to Monday, we're seeing the same thing Paul was seeing on Monday, just complete selling there. Obviously the new highs extremely outpacing the new lows, but what I think also is important is even on Tuesday and Wednesday, we saw, you know, a slight rise in the market. The new highs were still outpacing new lows.
Other way around. New lows were outpacing the new highs.
I'm sorry. Yes, thank you for correction. New lows are still outpacing new highs, and the tick really never recovered much at all here. And then we slightly recovered these lower areas, but then again back to Thursday and Friday, just under these again, and then back down again. So like Paul said, if you're going long, it's definitely a headwind. So there's no reason to do that. I'm going to go ahead and share a SPY chart that we're looking at for the week, and we had laid out these levels going into the week with our gamma levels that were pulled by the PBI charts in the SPY channel on Discord, and pretty much this 430 area up top is what we were looking at for the week, kind of to be the cap on the upside move. If we did get above that 430, we might have started to change our thesis a little bit if the tick was supporting that, but we never reached those levels. It was just continued distribution, as you saw with the tick and the price into those levels. So that gave us the confidence to continue to keep shorting and looking for opportunities to short bounces. Friday was a perfect opportunity. Bounce into the supply overhead again, the 430. We really never recovered early. And then the afternoon, we saw the sell-off, which was also correlated with the tick. One thing I do want to say is that the inverse ETFs that you can use to play these downside moves, SDS is one of those. This has been populating our gamma scans, and you can see kind of how that finished the week out. A little choppy, but you could have definitely taken a couple trades off of that range and profited. SDS for the week was up approximately 5%, while SPY was down around 2.8%. So again, we'll continue to look for the short side in this coming week, and then look for the tick if it decides to change. But as of now, everything is kind of pointing to continued further downside. So we appreciate everybody for joining us. You can check us out at GammaEdges.us. And then you can also follow us on Twitter and YouTube. If you go ahead and give us a like, that helps us, and subscribe to that channel. That will continue to move us up the chain and be the top of the search engines. Anything else you want to add, Paul?
Nope. Have a great week.
Yeah, great. We'll see everybody in the Discord room, and everybody have a great week and manage that risk this week. Thanks.